Hey guys, what's going on? Jeb here, and in today's video, we are going to be doing some shorter-term technical analysis on Bitcoin because Bitcoin has decided to go ahead and fall overnight. As you guys may know, Bitcoin rallied a couple days ago all the way up to $9,700, but overnight, Bitcoin pulled back below the 20 daily exponential moving average that we were hoping Bitcoin would hold support on. Not only is this a relatively bad sign for Bitcoin on the short term, it actually indicates that the next 2 to 3 weeks on Bitcoin may end up being remarkably bearish. We're going to be getting into today's video what that means and why that actually may be a bearish thing for Bitcoin over the next coming weeks. Guys, you know I'm bullish for the long term on Bitcoin, but the short term is much more up in the air right now. We are trading sideways, and Bitcoin most certainly needs to have a breakout or return to volatility, and we're going to be talking about all of that and which direction that breakout and return to volatility may be coming from in today's video. From there, we're also going to be jumping into some Fred data, and no, we're not talking about a cheesy Nickelodeon television movie from the mid-2000s. We're talking about Fred for the Federal Reserve's economic data. We'll be looking at none other than this chart, which shows the last 50 years of personal savings and how we jumped from 7.7% in December of last year to 33% this year. We're going to be diving into all of that and more in today's video, guys, and I think you're going to get a lot of good value out of today's video. If you do, as always, hit that like button, and if you're new here, consider subscribing for daily cryptocurrency updates. Before we dive on into it, I do want to mention CT2A as it is on sale. June 2020 coupon code is running. If you like $40 off at checkout, check us out. The link in the description down below. More on that at the end of the video. But for now, though, guys, without much further ado, let's go ahead and dive right on into it. As you can see with our Bollinger Bands and the constricting of volume and volatility over the last month or so, Bitcoin has been relatively boring. I'd love to hear if you disagree with me down in the comment section down below. If you think Bitcoin has actually been interesting for the month of June, please explain to me your reasoning, because I wholeheartedly disagree. Bitcoin has been very boring and is very sad, but I do think that may be coming to an end relatively soon based on everything we're going to be discussing in today's video. As I showed you, the Bollinger Bands have gotten very, very, very tightly constricted. We have not seen Bollinger Bands that narrow in a very long time. And the reason that that's important is because if you look at the history of the Bollinger Bands, they have a tendency to go from low volatility to high volatility, from narrow bands to wide bands. And we see that happen throughout the history of Bitcoin. On the weekly chart, that's very apparent. We go from periods of narrowing to widening, which, by the way, looks hilarious on the logarithm chart. And then we go to another period of narrowing, widening, etc., etc., etc. And the same thing can be said for the daily chart. As with all things, the Bollinger Bands on Bitcoin is cyclical, and right now we are at a very low volatile point in our cycle. As you will know, with cycles in cryptocurrency markets, the longer that part of the cycle continues, the more likely that it is to end, which means that the more that we trade sideways, the much closer we are to that sideways trading ending. And that leads us into today's analysis and the pullback that we've seen overnight. Bitcoin, as you guys who have been watching my channel will know, rallied above two important moving averages yesterday. They rallied above the 50 and above the 20. And unfortunately, Bitcoin did that, but it didn't manage to hold it. I was very excited and very happy to see Bitcoin above both of these moving averages. That was a very good sign. Going along with this weekly chart cross that we're going to see on the 20 and the 50, that was a very big deal. But, however, as of last night, as we said, Bitcoin has now fallen back below both of those. The last time Bitcoin fell below these and rallied above them, we managed to stay above for over 2 weeks. This time, we managed to barely stay above for 2 days. Make no mistake, my friend, Bitcoin is bearish right now as a result of this pullback. However, there is a significant amount of support beneath Bitcoin, and I've already showed you much of it. Many of them have to do with longer-term uptrending levels of support. We're talking about longer-term moving averages. We're talking about VPVR levels. We're talking about big evens like 9,000 flat, but there's one that I haven't shown you just yet, and that would be this one. Bitcoin has pulled back too and is currently sitting just above this uptrending level of support right now and below this downtrending level of resistance. And in fact, this is the one that you can extrapolate out for the past 3 years, so that's a very important one. But for the time being, let's look at this uptrending level right here. As you can see, we tested it back here in mid-May. We tested it again at the end of May, and we've tested it many times in the last couple of weeks here in the month of June. As it would happen, that's exactly where Bitcoin has pulled back to overnight, exactly to this uptrending level of support. When people tell me technical analysis doesn't work, I just laugh at them, because they don't even have any idea. Dude, but technical analysis is so awesome. If you were trying to predict preemptively where this market was going to pull back to, you had a pretty good idea because the levels of support were right there. Guys, let's also look at the time frame analysis here. How long did it take for Bitcoin to rise and then fall? This is more or less a glorified Bart Simpson pattern. Bitcoin rallied on candle bodies 4.5% over 22 hours, but Bitcoin at the same time pulled back 3.5% in 7 hours. We pulled back much faster than we rallied, which indicates slightly stronger bears. So look, guys, I want to be very clear on my position because some people have been saying, oh, Jeb, you're saying one thing and saying another. For the last 4 or 5 days, if you watch through all the videos, my position has been consistent. On the long-term time frames, 6 months and further out, I'm very bullish on Bitcoin. However, for the next 2 to 3 weeks, I have been consistently saying that I am pretty bearish on Bitcoin until I'm proven otherwise. A big part of the reason for that is because of the bearish signals that we're having, many of which I've shown you in this video. Remember the bullish MACD cross that we were going to have? Nope, didn't happen. Bitcoin pulled back and we got rejected from there. Stochastic RSI on the daily chart is pulling in and correcting on itself, and weekly chart stochastics are overbought. They need to be corrected before Bitcoin can start moving to the upside again, and it looks like if we continue on this trajectory, we're going to see a bearish MACD cross on the weekly chart. I'm just trying to give you the facts. It's easy to pull one technical indicator out of you-know-where and say, oh, well, that's going to cause us to explode. We're going to the moon, guys. Give me 1,000 exclamation marks in the title. And look, I do titles like that too. I'm not bashing anyone. I'm not insulting anyone. I'm not naming any names. The fact of the matter is, it's not as simple as one technical indicator, and I want you guys to be aware of that. I want you guys to be safe. I don't want you guys... The main point of this channel is for me to make sure you guys are taken care of and make sure you guys have the best understanding of where the market is going as possible. And my God's honest testimony is that I think Bitcoin is going to pull back at least a little bit. I think we're about to fall bearish out of this triangle pattern that I'm about to elaborate on. From what I've seen anyway, from what the analysis is saying, that's what it looks like is going to happen. However, let me put a little bit of a caveat on that. It is a fact, yes, that Bitcoin has pulled back below the 20D EMA. However, if you will notice, I have drawn only on our chart right now 2 trend lines, and they create some kind of flag, some kind of pennant, some kind of bull pennant here. Bitcoin was bullish moving into it. 70% of the times, Bitcoin is going to break to the same direction as Bitcoin was moving when it moved into said pattern. So if we're looking at the very short-term time frames, and we're zoomed in here looking at the last 72 hours, and that's all we're looking at, yeah, Bitcoin looks bearish. But if we zoom out, we need to take into account that the longer term looks bullish on Bitcoin. So this is why I'm saying this. The next 2 to 3 weeks on Bitcoin very well may be bearish. The next 2 to 3 weeks on Bitcoin, we might trade sideways out of this pattern and slightly to the downside. And I want you guys to be aware of that because it's just as important that you understand the long-term analysis as it is that you understand the short-term analysis, because there are trades and investments to be made on both time frames. So what's my prediction for Bitcoin? My prediction for Bitcoin is that we are bearish for the next couple of weeks, or we continue trading sideways in this pattern for the next couple of weeks. And from there, likely within the next 4 to 6 weeks, we're going to see bullish movement to the upside. You guys wanted my call? That's my call. Bitcoin looks bearish on the short term. Short term, to define our terms so that we're all on the same page, is from now to the next 14 to 21 days or so. From there, though, I'm hoping that as the economy starts to recover, we can start to see more bullishness. Speaking of economics, let's go ahead and jump into 2 charts. I was going to show you one, but I'm actually going to show you 2. I touched on economic recovery, so we're actually going to jump over to the TSA's website, and I want to show you something. Right here is a table. You can go to tsa.gov/corona/the news/passenger-throughput. We'll have this in the comments section, or in the description down below. And this will show you the amount of travelers that have gone through TSA checkpoints in that current day compared to 1 year ago on the same weekday. As you can see, during the height of all the panic back in April on 4/14, we saw as little as 87,000 people going through TSA checkpoints in America, when 1 year ago that day would have been 2.2 million. From there, ever since about mid-April, things have been recovering pretty steadily. I just had a friend get back from Illinois, and he was telling me the airports don't seem all that, desolate. They actually seem relatively crowded. And that would make sense, because now, instead of having 90,000 people going through TSA checkpoints, we have 600,000 people going through TSA checkpoints as of 2 days ago when I'm recording this video on the 22nd of June. This is a good sign, because if you guys don't know much about the airline industry operates on razor-thin margins. They have something like a 3.2% profit margin. It's almost non-existent, and luckily the airlines don't look like they're all going to go bankrupt and out of business, because that would be absolutely catastrophic for the American infrastructure system. At the same time, though, it's important for us to take heed and pay attention to the passenger numbers so that we have some idea of when the economy is coming back. And it does look like the economy is slowly starting to recover. Looks like people are slowly starting to travel again. It looks like people are slowly starting to adapt to this situation that we're in, and that is all around a good thing for the stock market, for the real estate market, and yes, also for the Bitcoin market. Give it time. It's going to end up being a good thing for Bitcoin. Realize something. Bitcoin rallied all the way up to $10,000 before this whole news-a-virus thing started. And during the news-a-virus, Bitcoin managed to rally right back up there. With lower fundamentals, Bitcoin rallied to the same level. What does that indicate? Same thing that we've been talking about for 2 years with underlying intrinsic value and actual price action. It indicates that Bitcoin is worth more now than it was 6 months ago. So both of the charts I'm going to show you are going to be linked in the description down below. I encourage you to keep an eye on both of them. But jumping on to the next one, this is the one we discussed in the intro. This is called the personal savings rate. PSA-vert, right there, as you can see, the PSA-vert. The personal savings rate for Americans. Some of this data comes from Bank of America. As you probably know, with any Fred table, these grayed out areas are recessions, and we don't have one listed on our chart just yet, but eventually we will. We have the 2008 financial crisis, the 2001 pullback and tech bubble, and we have the recessions back in the 80s and the 60s and 70s. And through all of them, you can see the highest savings rate. That's the highest amount of money in a savings account as a ratio to the amount of money that a person has in their bank account, was around 15 to 17% back in the mid-70s. As you can see, back in the 60s and 70s, we were much more of savers than we are now. We were hovering in between about 10 to 15% savings. And then we pulled back down to around 2.7% in September of 2005 as we started having massive television commercials and the internet and a massive wave of consumerism, the likes of which we saw in the Roaring '20s. That ended up leading partially to the 2008 financial crisis. From there, people started saving more, especially after the financial crisis, and we were hovering around 7%. In comes the news, and this rate jumps to the highest point in recorded history. At no point in the history of the American economy have we ever had anywhere near this high of a personal savings rate at 33%. And this is a huge deal. Of all the things that are going to impact our economy, restaurants going out of business, maybe there will be a major airline go out of business, all kinds of industries being massively affected. The hotel industry, the hospitality industry, the fitness industry, the television and the Hollywood industry, all of these industries are being hugely affected. Those are important, but this may be the most important, is the personal savings rate. Because this statistic right here shows you something about the American people. One, it shows you that we are getting massive amounts of stimulus pumped directly into our checking account, and people are putting in their savings and saying, I need to hold on to this because I don't know if I'm going to get my job back. But it also shows you that there are a significant number of people who are able to live on less than they used to be able to live on. It's really funny because a lot of people, many of you guys watching this video, and especially many Americans, and I realize this is an American statistic, this I guarantee you applies globally as well. So just because we're talking American statistics doesn't mean this isn't relevant for those of you in Europe and Asia. This kind of thing is indicative of people being able to save more money and cutting down on needless fat and luxury expenses that they otherwise don't need. People had about a 7% personal savings rate before this news-a-virus, and now it's jumped up to 33%. That has a number of implications on the global economy, and any one of you who is an economist will understand that. The fact of the matter is, the more money that people spend, the higher the GDP of the country is going to be, and the stronger the economy will be. The stronger the economy is, the more money people make, and therefore the more money that people can save. This also has the impact of people realizing, hey, I don't need to be spending $8 a month on 17 different streaming services. When this is all over, people are going to have learned through hell and fire during the coronavirus news that they cannot be spending the amount of money on random useless crap that they used to. I know a lot of people my age, twice my age, that have maybe 3 months of expenses in savings. Guys, that's insane. People cannot live off of that. You're a slave to money. You're not having money be a tool that you use when you live like that. And people are putting themselves in that hole because they think they need a $100 pair of shoes, or they think they need a $500 necklace, or they think they need $10,000 diamond earrings. When this is over, in the same way that 2008 did, in the same way that in the 50s, people that had gone through the Great Depression realized, look, we can't be spending all this money. We need to have savings. Cash is king. Cash flow is also a pretty big lord in that whole kingdom. A lot of people are going to start to understand the value of money, albeit they may have understood the value of money even more if not for all the government stimulus and we had to rough it on our own. But I think this will end up being a great lesson for people, and I think it will end up being a good thing for the economy, even though lower spending on useless crap will have a negative impact on national GDP, because at the end of the day, GDP is more or less just a measure of how quickly money is flowing through the economy, and if more people are saving it, they're taking money out of circulation, and they're more or less making the circulating supply of the US dollar go down, which decreases the national GDP. The reason that all of this is important is for several different reasons that we've already talked about. One of them, however, is that people are going to have more cash on the side to invest. And I could definitely see some of that money that people are saving once their jobs are back and their lives are stable going into Bitcoin and cryptocurrencies and speculative assets that are designed to be a hedge against global economic catastrophes, the likes of which we've seen. Out of every asset that we've seen, what has performed the best? I'm talking stocks, indexes, commodities, forex, ETFs, everything. Bitcoin has outperformed all of them. Bitcoin returned to exactly where it had started before all of this news happened, and it returned there quickly. People are going to realize that, and people are going to begin investing in Bitcoin with all of that cash that they have sitting on the side. This will end up being a good thing. We needed a controlled burn. In this case, it wasn't so controlled, but we needed some kind of burn in the global economy, and I think this will actually end up being a good thing for the long term if it all plays out well. We can talk about that more in future videos. If you guys would like some more global economic stuff rather than just Bitcoin, let me know. I love talking about it. Tell me in the comment section down below. Anyway, guys, that is going to more or less just wrap it out for today's video, but I do just want to mention one thing before we go, and that would be CT2A. Guys, I built CT2A almost 2 years ago now. We launched on September 3rd, 2018. It has been around for almost 24 months, and in that time, we have gained 1,815 students. Thousands of people have gone through the academy and enjoyed it and gotten a lot of value out of it, and that is so incredibly humbling to me. I love reading the emails from our students talking about how well they're doing now that they've gone through the academy. Someone on Twitter yesterday made some fan art of me, which I have never had happen, but it was pretty cool. I'm definitely happy with it. But so the person that made this fan art said, once I reach my portfolio goal, I'll be taking his CT2A course. And someone said, it's definitely worth it. Guys, I've told you this in previous videos, and I'm going to tell you again because it's very important. The greatest investment you will ever make is not an investment in ETFs. It's not an investment in index funds. It's not an investment in real estate. It's not an investment in gold or corn futures. It's not an investment in the stock market. It's not an investment in the DJI or XRP or Litecoin or Ethereum or even Bitcoin. The best investment you will ever make is an investment in yourself and the one in your brain. I made that investment 3 years ago, and I've been continuing to make that investment ever since through my own personal education and studying people much wiser than I am. It was the greatest decision I have ever made, at least one of them, and I encourage you guys to do the same. If you want to learn technical analysis and you don't know where to start, CT2A is a great place to do it. This course was designed to take you from the very basics. If you're new here, you don't have to be a newbie to go through this course, all the way up through the far more advanced concepts that we talk about down here in the technical analysis portion of the academy. Many more updates are going to be coming to this relatively soon, and I also do have one more announcement. The price of CT2A will be increasing from $249 to $299 at the end of this month. So if you want to jump in before that price increase happens, I encourage you to join before the first of this month. You can use the June 2020 coupon code right over there and get $40 off at checkout. It's actually like $90 off at checkout because, you know, the course price is about to go up also, so there you go. You're welcome. Anyway, guys, look, one of the most important things to me in my life is my integrity. I take it very seriously in my personal life and in business. I wouldn't lie to you and tell you that the course is worth something that is worth money if it weren't. I talk to our students every single day over in the first cohort in the CryptoJeb Discord server, and they always tell me good things about the academy. I encourage you, join our Discord server down below, our free Discord server, and talk to some of our students and see what they have to say. If you don't believe me, I encourage you not to believe me. Go talk to our actual students, get their actual testimony, and see what they have to say. Anyway, guys, that is pretty much going to wrap it out for this video. I realize that this has been a hard year for a lot of people. A lot of people have lost their jobs. A lot of people are going through financial hardships. A lot of people may have gotten sick. It's been a difficult year. That much is true. That much is very sad. But I think at the end of the day, what's most important is that we play the hand we're dealt instead of complaining about the hand that we were dealt. Because at the end of the day, we can't change the hand that we were dealt. We can only play the hand that we were dealt. And as the wise philosopher Kenny Rogers, who passed last year, once said, every hand's a winner and every hand's a loser. And the best that one can hope for is to die in their sleep. Anyway, guys, that's just something I've been thinking about. It's important to think about that because in life, we have the opportunity to choose what we focus on. Most people, especially in the first world, for some reason, we're the most blessed people on the planet, but for some reason, we choose to focus on the bad when we could very easily choose to focus on the good. You get to pick what you focus on. So make sure you're focusing on the right thing, guys. Anyway, like I said, that is going to wrap it out for today's video. Before I go, though, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.